The other category is exchange traded funds. Now what is exchange traded funds, friends? As I said, in case of mutual funds, they are to be redeemed. They have to be redeemed. They cannot be, there is not a secondary market available for buying and for trading in mutual funds. If I want to have a secondary market where they are to be traded, then it is through the exchange traded funds only. So there are funds, specific funds, which can be traded on a recognized stock exchange. They are called as ETFs, right? So ETFs is exchange traded fund. It combines the best feature of an open-ended and a closed-ended structure. So it has the dual feature in it. It is an open-ended fund, but at the same time, it is also a closed-ended fund. Why? In a closed-ended fund, the returns can be pretty good. Why? Because when the fund manager knows that, when he knows that the funds are going to be there intact with me for pretty long period, he can do the investments more appropriately, more in a better way than in case of open-ended funds where he doesn't know when the funds are going to be redeemed by the investor. So it is taking the best feature of these two categories of funds. It tracks a market index and trades like a stock on the stock market. As I said, ETFs are basically mutual funds, but then they are readily traded on a recognized stock exchange. They are not the index funds. We cannot say that they are index funds. They are basically exchange traded funds are the funds wherein the funds are going to channelize the funds into an investment into a particular sector, and that stocks are available on the stock market. Now there is real estate funds also. Now what is the basic feature of a real estate fund, friends? It can invest in real estate. It funds real estate developers. So real estate funds can directly go into a real estate. They are going to buy some property, or they can fund real estate developers. So anyone who is coming up with a new project, new real estate project, for those developers, the real estate funds can be used. It can buy shares of housing finance companies. So real estate funds, the third investment which can be rooted is through the housing finance companies. They will buy the shares of those companies, or it can be through securitized business. So any securitization, securitized assets that are floated into the market, these real estate funds are going to park the money in those securitized assets. Now coming to the fund structure and its constituents. Very important is to know the structural framework of mutual funds. As I said earlier, friends, in India we have a structure, or we have mutual funds that are constituted in the form of a trust. Now the structure is a three-tier structure in mutual funds. As you can see, the main important role that is being played is by the sponsor. So sponsor is the one who is running the mutual fund. Then he will appoint the trustees and the AMC, that is the asset management company. Asset management company in turn will appoint the bankers for the mutual fund. They are going to appoint the marketing and distribution. They are going to decide on the marketing and distribution channels. They will have the fund managers who are going to manage the funds which are collected through the pool. And there are registrars and custodians. So custodians are appointed by the trustees basically. So, but then they work under the guidance of the AMC, the asset management company. The trustees are responsible for the investors' money. They are the primary guardians. So when I say, yes, when Mr. A has put in his funds into that pool, he has contributed into the pool, he is concerned about the principal. Rather than getting good returns, he is also more concerned about the principal coming back to him. In such a case, the trustees are going to give him, they are going to give him that confidence that the funds are, that they are going to act as a guardian to take care of his funds. Now, what is the regulatory structure of mutual fund in India? The structure of mutual funds in India is governed under SEBI's Mutual Fund Regulations Act 1996. It is mandated to have a three-tier structure, that is the sponsor, the trustee and the asset management company. So as I said, the three-tier structure which is prevailing in India for the mutual funds is the sponsor, the trustee and the asset management company. Now who is the sponsor? He is basically the promoter, right? So he is the one who is going to start the mutual fund business. The sponsor, he is the promoter. He is going to appoint the trustees and the AMCs, the asset management company, who are responsible to the investors of the fund. AMC is the business face of the mutual fund. So the interaction basically with the investor happens with the AMC. So the asset management company and is the front end for the investor. So the AMC is the company which is going to be the business phase for the investors who are going to invest in mutual funds. Now, who can be a sponsor? Now, there are guidelines, friends. There are basic guidelines which have to be complied with, which have to be fulfilled to become a sponsor. And what is the role of the sponsor? That is what we'll check out now. Now, the sponsor establishes the mutual fund and registers the same with SEBI. So, what is his primary role? The primary role of the sponsor is he is going to establish the mutual fund. Once he has decided, okay, let me start up with a mutual fund, he is going to establish it and he is going to get it registered with the SEBI. Then, sponsor appoints a trustee, the AMC and the custodians with the prior approval of SEBI and in accordance with the SEBI regulations. So, he is the one who is going to appoint the other pillars of the mutual fund, right? And but then what is the basic requirement for becoming a sponsor? He has to have a 5-year track record of business interest in the financial market. So, firstly, very important is he should have a good track record, a minimum 5-year track record of doing business in the financial markets. Okay, that is the first requirement from the sponsor side. Then the sponsor must have been making profit at least for 3 years out of the 5 years. So, if I am talking about 5 years track record, I at least would expect that he has 3 years of profits made out of those 5 years. So, the sponsor must contribute at least 40% of the net worth of the AMC. So, the asset management company, when it is going to be formed, there has to be a contribution that is going to come from the sponsor's side and which has to be minimum 40%. Now, who can be a sponsor, friends? The sponsor could be a bank, whether it is SBI, PNB, ICICI, HDFC, any bank can become a sponsor, right? Because they are already into the financial market, they are into that financial they are the financial institutions running, and that is the reason they can easily become a sponsor. Then there can be financial institutions like Franklin, Templeton, Fidelity. So they can also become a sponsor, or it can be a corporate also. A corporate can also think of starting up with a mutual fund business. It can be Reliance, it can be Birla, it can be Tata. So these corporates can also become a sponsor of a mutual fund. How are the mutual funds structured in India? In India, we have it in the form of a public trust created under the Indian Trust Act 1882. Very important, for the foremost requirement for a mutual fund structure is it is to be opened in the form of a public trust. Then the fund sponsor acts as the settler of trust, contributes the initial capital, as I said 40% contribution has to come from the sponsor, and he is the one who is going to appoint the trustees to hold the trust for the benefit of the unit holders. So the the unit holders have to get the confidence, they have to have the trust, and the trust is going to come from the trustees who have been appointed by the sponsor. Mutual fund is just a pass-through vehicle. As I said, they are accumulating the funds from the investors, they are creating the pool of the funds and they are passing it on to the market. So it is just a pass-through vehicle wherein the funds are being passed to the required sector or to the required market. The trustees hold the unit holders' money in a fiduciary capacity. As we said, they are the primary guardians of the mutual funds. They are holding the funds, holding the money on behalf of their investors. Definitely the money belongs to the investors. They are the mutual owners, the joint owners of the mutual fund scheme. But then yes, the trustees are always there who in fiduciary capacity, they are going to keep a track of the money, where the money is being invested, where it is being rooted. So money belongs to the unit holders, but the trustees are working under a fiduciary capacity. In legal sense, the investors are beneficial owners of investments. Now, what are the rights of a trustee? The trustees appoint the AMC in consultation with the sponsor and according to the SEBI regulations. So, as we said, the sponsors will appoint the trustees and trustees are going to appoint the AMC, but with the approval coming in from the sponsor as well as the SEBI, right? So they have to comply with the SEBI guidelines, the SEBI regulations, and then they are going to appoint the AMC. The all mutual fund schemes that are floated by the AMC has to be approved by the trustees. So they will give an approval if let's say AMC has to come up with a new fund, the features, the scheme, the objective of the scheme, the corpus, everything has, the NAV has to be approved by the trustees. So trustees are the one who are going to give an approval to the AMC to float a new fund into the market. Trustees can seek remedial action from AMC and in cases dismiss the AMC. Now what this means is, now let us say the AMC has collected funds from investors, right, wherein they said that the investment objective is investing only in debt funds, right. So when the funds were collected from the investors, the objective that was claimed or the objective that was set by this fund was that the investments are going to be routed into the debt market. But then in actual, because as there is, the investors don't have any track on where the funds are being invested or where the funds are being allocated, it is all the fund manager's role in that. Now fund managers, if they are going to route it into the equity market, let's say, without the knowledge of the investors, without the knowledge of the owners for that matter. So if the owners are not knowing, the objective was debt market, but then they have wrongly routed those funds into the equity market, in such a case the AMC can be penalized, right. They can be they can be dismissed also. So remedial actions will be called on from the AMCs. So who does that? It is the right of the trustees to call for a remedial action from these AMCs. Now what are the obligations? Now when they have certain rights, the trustees also have certain obligations. What are the obligations of the trustees, friends? The trustees must ensure the due diligence on the part of the AMC in the appointment of the constituents and business associates. So who are going to be the business associates with the AMC? They have to see to it that due diligence is done from their end. Trustees must furnish to SEBI on a half-yearly basis a report on the activities of the AMC. So AMC, what the AMC is doing, where the funds are being allocated, where the funds are being routed, all these things are to be intimated, are to be informed to the SEBI by the trustees. Then the trustees must ensure compliance with the SEBI guidelines, SEBI regulations. So they have to see to it that the regulations are fulfilled. The SEBI regulations require that the meeting of the trustees should be held at least once in every 2 months. That is again one important requirement. So that becomes obligatory for the trustee, that as per the SEBI regulations, they have to at least meet once in 2 months, right? So to decide, to understand what the AMC is doing, so how the mutual fund is performing, what are the fund managers, what type of returns the fund managers are giving to their investors. To know about these things, they have to keep meeting on a regular basis. Now what is the regulatory requirement for the AMCs, friends? Now as we have rights and obligations of the trustees, we have certain criteria for the sponsors. In a similar fashion, we have certain regulatory requirements for the AMC also. What are those regulatory requirements? Firstly, only SEBI registered AMC can be appointed as an investment manager of a mutual fund. So they have to be registered with the SEBI, and on that basis I can decide who will be the fund manager who is going to play with the funds, or who is going to manage the funds under the AMC. The AMC must have a minimum net worth of 10 crores at all times. So there has to be a contribution to the extent of minimum 10 crores that has to come from the AMC's end. AMC cannot be an AMC or a trustee of another mutual fund. So once I have been appointed by, let's say HDFC has appointed me as their AMC, then I cannot go and become a trustee, or I cannot become an AMC of another bank or another financial institution. AMCs cannot indulge in any other business other than that of asset management. So the prime objective of appointing an asset management company is that they are going to manage the funds. They are going to actually see to it that they are rightly placed in the market, depending on what is the investment objective of that particular fund. So they are going to route the funds in the right track, and that's the reason they cannot indulge themselves into any other business, right, which might lead to some misappropriations of the funds that can be done through an AMC. At least half of the members of the board on the AMC have to be independent. So there has to be independent directors under the asset management company. The fourth schedule of SEBI regulations spells out the rights and obligations of both the trustees and the AMCs. So it is covered under Schedule 4. The agreement between the trustees and the AMC is known as the investment management agreement, right? So there is an agreement which is drawn between the trustees and the AMCs, which is called as investment management agreement. Now, who appoints the AMC and defines its functions? As we said, the sponsor or the trustee, and if he is authorized, now he has to be authorized by the sponsor to appoint the AMC. AMC is usually a private limited company in which the sponsors and their associates or joint venture partners are shareholders. So there has to be a contribution that has to come from the sponsors and in the AMC. The AMC has to be a SEBI registered entity with a minimum net worth of 10 crores. That is what I have already talked about. The trustees sign an investment management agreement with the AMC which spells out the functions of the AMC. Now, there is another participant in the mutual fund. In the structure, we have registrar and transfer agents. Now, the buying, the redemption, the buying of mutual fund units, all these things have to be channelized through these agents. So, registrar and transfer agents are responsible for the issuing and the redeeming of the units of the mutual fund. What are the various services that are being provided by these registrar and transfer agents include the they process investors' applications. So, when the investor applies for a particular fund, the processing is done at their end. They record the details of the investors, right? They send information to the investors about the performance of their fund, what is the status of their units, and then they process dividend payouts. So, if any fund has declared a dividend, then the dividend has to be passed on or has to be processed by these registrar and transfer agents. They incorporate changes in investors' information. So, if the investor has changed his residential address, his bank details, those details are to be incorporated into the system, and that is done through the registrar and transfer agent. He keeps the investors informed, up to date. So, investor information is kept on an up to date basis. There are registrar and transfer agents like Carvey and CAMS in India who are really playing a great role in the mutual fund business. The other category of participant in a mutual fund is the selling and distribution agents. Friends, even you can become an agent of a mutual fund, but then for that you need to pass a certificate, or you need to obtain a certificate from the AMFI. So, you have to be AMFI qualified to become a selling and distribution agent of a mutual fund. Now, what is the role being played by the selling and distribution agents, friends? Basically, they are selling, right? So, what are they selling? They are selling the mutual fund units. So, selling agent brings the investors funds for a commission. So, they are the one who are going to be the front end for a mutual fund. They are the one who are going to channelize the funds from the investors and route it into a scheme, and for that they receive the commission. The distributors appoint agents and other mechanism to mobilize funds from the investors. So, the mobilization of the funds from the investors takes place through these selling and distribution agents. Banks and post offices can also act as distributors, wherein they are going to appoint the agents who will be selling the mutual fund units. The commission received by the distributors is split into initial, that is upfront commission, which is paid on mobilization of funds, and trail commission, right? It is not one time commission, friends. One time, the first time when they are going to bring the business, they are going to get upfront commission. After that, as the investor remains intact with that particular fund, he remains invested in that fund, they are also going to receive a trail commission, which is paid depending on the time the investor stays with the fund. So, as I said, if I am going to remain into that fund, the agent, the selling agent is also going to receive a trailing commission. And then the sponsor or an associate can also act as a distributor for the AMC. So the sponsors can also decide that rather than giving the business to a third party, why not they only become the distributing agents and get some commission out of it. So they can also be, they can also act as a distributor for the AMC. The last important role that is being played in the mutual fund structure is by the custodians. Now, who are the custodians, friends? They are the watchdogs, or you can say they are the one who under whose custody the mutual fund units are going to be kept. So, what is their function? Their function is basically they are responsible for the securities held in the mutual funds portfolio and is required to be registered with SEBI. Friends, any participant who is going to be a part and parcel of the mutual fund business has to be by default registered with the SEBI. The custodians are appointed by the Board of Trustees, right? So the trustees are going to decide who are going to be the custodian for that particular mutual fund. They keep an investment record of the mutual fund, so where the buying and selling, because the portfolio doesn't remain the same all the time. The fund managers, depending on the scenario, on the market scenario, on the performance of the companies, they keep churning the funds. They keep selling the units from one company and then parking it to some another company. So when they are going to churn the funds, the records of these investments of the fund managers, whatever investments are being done by the fund manager, the record of the same has to be kept by these custodians. They collect the dividends and investment payments due on the mutual fund investments. So they are in touch with the companies, right? So what they do is, if a company has declared a dividend or there is any income on the investments done with the particular company, with a particular issuer, they are going to the custodians are going to collect those dividends on behalf of the mutual fund houses. The custodians and the sponsors cannot be the same entity. So if HDFC is a sponsor, they have to appoint some other bank or another financial institution as a custodian. So the HDFC cannot be a custodian of its own, and it cannot be a sponsor of the same mutual fund house. The custodians are the guardians of the funds, and they are actually guarding the assets of the investors. So they are the guardians who are going to keep the investors' assets intact into the fund. Thank you very much, friends. That's all for mutual fund.